Good morning, everybody. Thank you for participating and attending. It's always good to have people on the other side that we know are engaged. So I'm definitely excited about that. As Erica mentioned to you, I've been fortunate enough to be with Mike Albert for 49 years. I do tell people that I was only 12 when I started, but I think that with that experience, I think I can offer you some good sound coaching, and that's really what the approach is that we take. So we take more of an educational approach. We don't really try to sell anybody anything because the benefits of of understanding what options are out there for you far outweigh any kind of sales pitch that anybody could give you. And the hidden costs that you may have in your or hidden capital that you may have in your current fleet, a lot of people don't stop to think about how that can be applied into their business to help them grow the business. It's basically found money that's not being utilized at the most efficient way possible. So we hear a lot of guys that may be forced into straight line financing, or they may pay cash for vehicles. Both of those are not really good or not very efficient uses of capital, and that's what we'll get into here. So this isn't going to be like the TV commercial where the guy goes around knocking holes in the wall looking for hidden money in his house. We make it a lot easier than that. So let's jump into it. So as I mentioned, we take an education approach to walking through your fleet, understanding what kind of options are there from a financing standpoint, and then what options might be there as far as a financing structure that matches your particular fleet. So we kind of have moved this into, or have identified four basic buckets, if you will, that we feel people should focus on. The first one, and we see this day in and day out, is understanding and establishing a proper life cycle. So many people that we deal with are very reactionary. Oh my God, I lost a vehicle, or I didn't know that I was going to get this other contract, or those kinds of things. And it's mostly around a vehicle lays down on them, and then they need a replacement like ASAP. Well, we'll get into this a little bit later on, but in today's environment with the vehicle shortages, that's not a good thing. So then we want to talk about how we can then offer financing strategies to optimize cash flow. Our program will demonstrate to you how you're going to be able to, by using our financing methods, be able to save enough money on a monthly basis so that virtually every fourth or fifth vehicle that you get using this strategy is basically free over a straight line model. And then we also want to use this as an alternative source of funding so you can preserve your business line of credit or your personal line of credit. Some of the smaller franchisees are forced to personally guarantee whatever it is that they're getting from their, especially new franchisees, are forced to personally guarantee things. And the more you have to guarantee, the more it impacts your credit score. Now, we may require that same thing in some cases, but the positive is we don't report to the credit bureau, so it doesn't impact your credit score. The only time we report to the credit bureau is if we get left out in the cold and somebody doesn't pay us anymore. And then lastly, the one-stop shop approach. We've got other vendor partners that are BIMAX recognized that we work with to really make it a one-stop shop approach where you don't have to get involved in worrying about the graphics, worrying about the upfit, worrying and fronting money for all those things. So those are all things that we'll go into. So first thing, we want to understand funding strategies. So our goal is to reduce out-of-pocket expense, optimize cash flow, preserve business or preserve lines of credit, business and personal, and then only pay for the portion of the vehicle that you're going to use. Think about when you do your taxes. I tell people all the time that if you think of us like you do your accountant is going to tell you only pay this amount of money because that's all you have to pay, and that's what you want to do. We're kind of the same way as it relates to your fleet. We don't want you to pay for the entire vehicle because you're not going to utilize the entire vehicle. It's going to have a life cycle, again, which we're trying to coach you on, and then we're going to depreciate and finance to that goal. So those things help in larger companies that are worried about EBITDA, that it helps in a positive way on that. And then it just, as I mentioned before, it helps preserve your working capital. And that's critical because cash flow, as we all know, cash is king. So one of the things that, there's common mistakes and misconceptions. So, excuse me, I hear this all the time, Mike Albert Leasing, Mike Albert Fleet Solutions. Oh, I can't lease. Well, we are a leasing company, but we're more of a financing strategy partner first. So many people confuse when they hear the word leasing, it completely confuses them. They think it's just like the last vehicle they got at a dealership that was a closed-in lease that forced them to have a term and mileage parameters, that sort of thing. So our alternatives are going to do all the things that I mentioned before: optimize cash flow, preserve capital. And we use this matched depreciation strategy, which again, on this example, is like in the service side of things with the 1 hour Ben Franklin, Mr. Sparky guys. This represents the general savings that you would have with a mid-roof transit. So for just by having the right financing strategy, you're going to save $150 a month, roughly. Now, you can use that to pay the cell phone bill. You can use that, piggyback one on top of the other. If you've got a larger fleet, it's back to what I said before, where it'll help you save enough to where you get a free vehicle for every fifth or sixth vehicle that you obtain. Clarifying the financing. So as I mentioned just a few minutes ago, so that today, so many people think of leasing as closed in, what they did at a dealership, that sort of thing. But the leases that we offer are called track leases. And these are true financing type options. And as I mentioned before, these are alternatives to your bank line or manufacturer financing. And there's two ways to categorize the track, and you can make it an operating lease or you can make it a capital lease. Used to be everybody wanted to make it an operating lease where you just write the payments off as an expense. Now with the accounting rule changes and accounting changes in general, most people want to make it a capital lease and they treat it as a sale. So we have that ability. We have the ability to go either way. So it's just what is the desired goal from your accountant standpoint. So we can be flexible. Understanding interest rates. Now this is always a touchy spot because we're never going to be 0% financing. We're going to offer competitive financing, but the big thing is when you think back to that $150,000 or $150 a month, what is your internal rate of return on that savings? So again, this is that hidden cost in your fleet or hidden capital in your fleet. That $150 can translate into probably a 12 to 15% gain. That's what people tell us as an internal rate of return. That means that's what that money's worth to you in your business, growing your business in some other way than having it tied up in a vehicle. We offer fixed or floating interest rates. Most everybody wants fixed, which is fine. Floating interest rate is a little bit less, but then you assume a little bit of risk as the potential for increases materialize, going forward. And then we offer different terms where it's either 60 or 72 months. So for example, a typical service vehicle we put out for 60 months with a desired life cycle mileage of 120 to 150,000 miles. Now, a lot of people will say, gee whiz, I don't want to get rid of it at 150,000 miles because I drive my trucks 250,000 miles. Well, what we try to do again is educate them And I tell people, look at the cable TV company. They don't drive vehicles forever. They have a planned life cycle, because what happens is the vehicle now has value to somebody else, and you can get out of it before it starts to cost additional money, downtime, any of those sorts of things. If it adds to the cost of your fleet through some of those bumps in the road, unexpected maintenance costs, missed service opportunities, downtime. Then you have your technician who gets a little upset because the vehicle broke down. He didn't get to make any money, so everybody's unhappy. So that's where we try to pick the right type of life cycle. And this is a demonstration of that, where we try to take this red line, think of that as the vehicle depreciation, and the blue lines being the maintenance cost curves. We want to find this sweet spot where we can better predict for you, based on experience, that sort of thing, as to what the proper life cycle is. So here's an example of a real customer that wanted to run their vehicles further for their particular application. They were pickup trucks in the construction field, not the work trucks, but more management trucks. And we showed them, because they were on our maintenance program, we knew the fleet inside and out, that really cycling between 110 and 120 is the optimal for those vehicles, as opposed to keeping them longer past 120. It was significantly more expensive. So that was one of the other things that we were able to point out to them. And we used this data to help coach and manage the smaller fleets. So somebody that has 5 vehicles, they're not going to be exposed to all this data. But we know from what we've learned from other large fleets that we do business with, or other fleets, period, that what should be the proper goal for their fleet as well. I tell people, this is one of my favorite slides. Everybody beats me up about this because it's an old slide. But so many times we see people that focus on the acquisition cost of the vehicle. Well, the acquisition cost of the vehicle only represents 35% of the overall life cycle cost of the vehicle. The rest of it is what really drives the total cost of the fleet from a life cycle standpoint. I tell people, think about the Titanic. What sank it wasn't what they saw, it's what they didn't see. And that's the same logic that you would want to use for fleets today. And especially in today's world, where I've never seen this in 49 years, I've never seen a situation where you have to pay MSRP for a fleet vehicle, or dealers won't even sell to you fleet because they lose an allocation. They'll sell to you retail, but they won't sell to you as a fleet buyer. I've never seen that before. So we are in some uncharted territory as it relates to that. So focusing on getting the vehicle, getting it implemented, putting it on the right financing strategy. And again, with that match depreciation, that allows you to free up a little bit of the capital, even if you do have to overpay for the vehicle. But we can make it a little more palatable because of that savings that you're going to have on that cash flow. One of the other things, cash flow savings wise, I see this all the time. Folks will get their new vehicle. They'll have to pay for the upfit. They'll have to pay for the wrap. Well, we blend it all together into one monthly lease payment. So that's another advantage from a cash flow standpoint. You don't have money tied up in the vehicle. It's all on a simple monthly payment scenario. So this is one of my, if not my favorite slide. I've used this in presentations before. We've done breakout sessions at some of the conventions, and people always come back to this. So this is better understanding that match depreciation and how optimizing cash flow really translates to numbers for you. So today, if somebody is straight line depreciation and financing to zero over 60 months, they think that's the right thing to do because that's the only thing that the manufacturers are offering, or that may be the only thing that their bank line is offering. But in fact, whoops, wait a minute, wrong button, sorry. In fact, the vehicle depreciates at a much different rate. So what we do then is we match the depreciation to the vehicle's depreciation. So then you have this gap here, which represents that $150, for example, on a transit that I mentioned to you. So this to me is really drives home the point of how using true match depreciation, the right financing strategy, can really lead to a significant monthly savings on each of the vehicles. And as I mentioned before, we preserve personal and business lines of credit. We kind of talked about that. One of the other things that I mentioned in the 4 blocks that we had up in the beginning under the education section is the one-stop shop approach. So it's really efficient in that if you call us, if you call the dealer, if you call the graphics guy and say, hey, I'm looking to do this, we all work together. So it's basically one call does it all. we can, if somebody calls us looking for a particular vehicle, if they're an existing fleet, it's smooth sailing. It's not an issue. If they're a new fleet, there's a setup process. So we have to make sure we get you through that, which I'll touch on here in a few minutes. But it's incredibly efficient, the partnerships that we have with the other vendor partners that are within the BuyMax group. Now, if you have a local relationship, that happens, and that's fine. Maybe maybe your brother-in-law works at the dealership, or your kids go to school together, or sports activities, or you play golf, or whatever. Or the person the dealership is a client of yours. We run into that. So that's fine. We can buy from that dealer. It just makes the upfit and graphic side just a tad more labor intensive. Not a big deal, but it's certainly something that we can do, and we're more than happy to do that. The other thing that we do or don't do, all other fleet management companies, if we buy a vehicle out of stock at a local dealer, they always mark it up. There's a percentage markup that they do. We do not do that. So if we buy it from XYZ dealer, I'm doing this with Mosquito Squad franchisee right now. He found the vehicle, and whatever the deal is the deal, and that's what we'll capitalize the vehicle at, but set him up on match depreciation as opposed to the straight line financing that the dealership was offering. So one of the other things that is kind of unique, we feel, to us, are the acquisition options. Obviously, we can do new. Everybody can do new. But we offer a purchase-leaseback. So we've seen this with fleets before that are already entrenched or have been used to ownership. So what that does for you is that, again, has your money tied up in the vehicles. So the purchase-leaseback option is something that we can offer where we evaluate the fleet. We determine if we can help in some way, shape, or form get positive equity back into the vehicle or back into the fleet, or reduce your lease payments. I just did this with a franchisee, one of the BuyMax franchisee that had about 70 vehicles. They had about 25 of the 70 that were paid off. And we were able to, and they're with 2 other leasing companies. So we were able to buy the fleet, buy out the units that they owned, and lease them back to them, generate some positive cash that they had a certain dollar figure that they wanted, that they were going to use to buy some other equipment for. So there you go, back to using the hidden cost, or I keep saying cost, I apologize. The hidden dollars that are in the fleet to apply it somewhere else, and get the proper return on it. So they were buying a very large piece of equipment that they didn't want to run through their bank line. So we found them the money within the fleet. They could have gotten more, but they decided to wait till another year because there can be a tax impact, because anytime you're selling a vehicle, there could be potentially a gain there. But the important part is we took their entire fleet, and as I mentioned, they were with 2 other vendors that didn't utilize the match depreciation, and we lowered their monthly lease payment by $12,000 a month. So that's a tremendous value, I think, and they did too. So that was a win-win for all of us. Now we also offer slightly used vehicles. For example, and we've done this with many of the franchisees. In fact, I'm doing a couple right now for a 1 hour franchise. But we have the ability to buy gently used, and we have a source for these. They're typically 15,000 miles or less, and there's sporadic availability. So it's not something you can say, well, I want this type of vehicle. It's one of those, well, here's what came out of the source, and this is what we can offer. There's one major fleet in the country that gets new vehicles every 12 to 18 months just because of the way they cycle out of them, and that's where these vehicles come from. Excuse me. So this is just an example. This was an actual new franchisee that was converting to a 1 hour. He owned 12 vehicles. This is back to that purchase leaseback scenario. And we wrote him a check for $175,000, and he used it to open another location. So again, benefits of getting that money out of the vehicles and then applying it somewhere else in the business to where you really get the proper return. So I mentioned before, one of the things that makes us different is the analysis that we do of the fleet. So we really want to understand the optimal life cycle for your group. We know what the optimal life cycle is for the typical service group, but with the broader number of franchises that Authority Brands has now, and in conjunction with BuyMax, so we've got a lot of different applications. So there's going to be a little different application for each franchise depending on what the service level is. So for example, where I said that we do typically 60 to 72 months. Well, some of the monster tree equipment may last a little longer because it's a little more expensive, and it's got a longer life cycle. So those are the things that we would take into consideration. We're not trying to take everything and put it in the 60-month bucket. There may be other ones that drive more miles, for example, and we need to shorten the cycle up because of that. But again, these evaluations that we do of a fleet to really understand the fleet and understand where you're at in your fleet, those are all things that are beneficial. Now, I don't have an example here of a purchase leaseback because I don't like to share other companies' true financial pictures. But these analyses that I'm focusing on here are all things that we would use in conjunction with that a potential purchase leaseback analysis. And it's important to note that none of this costs any money. We do this as a demonstration of earning business as opposed to a revenue stream. We want to make sure that we understand your fleet so we can guide you in the right direction and then structure it correctly so that you're not overpaying. Again, our goal is optimizing cash flow, and all the things that I've mentioned thus far. Some of the other FMCs will say that, oh yeah, we'll do a book value for you, and they don't get aggressive enough. They don't do a true book value. They do something that appeases their client. But then when they make money at the end, they try to get them to put that money back in the vehicle as a deposit, as a cost reduction. But again, that's tying your money up in the vehicle. We don't agree with that. We would rather have you use the monthly cash flow gain as it throughout the term of that vehicle to really truly optimize your cash flow. Now, from a support standpoint, we've got you, the client, but everybody gets assigned a client partnership manager. We have a client support specialist. We have upfit engineers. Our truck engineers can walk through if you've got a strange request. I need this kind of vehicle. I kind of know what I want, but I'm not 100% sure. They'll work with you directly to make sure that we achieve the right end unit. The data analytics that I mentioned to you, we have an onboarding manager onboarding process when we sign a new customer, and this applies to somebody that has one truck or one vehicle, all the way up to a major fleet. Obviously, there are things that are more important to the larger fleets from a service standpoint. We'll touch on some of those towards the end of this presentation. But those are things that we would talk through our onboarding call to find out what exactly are the goals of that particular new client. One of the things that we've done that sets us again apart from other fleet management companies is that um, we actually have divided our service teams into two groups. We have our national and regional client partnership managers and team. Those are more conventional large fleets that we do business with. But as we got into our partnership with Bimax several years ago, we recognized that there was a need for a more individualized approach where we had a dedicated person to that particular client. So the CPMs, client partnership managers within the Express team, are dedicated to the franchise world, because we found that when, as a business owner, when you call and you're looking for somebody to help you, you don't necessarily need to go through a couple of layers. You don't need a national client partnership manager that's going to go over a lot of data with you. You just need somebody that's going to help you with some of this program services, and primarily just be there when you need them. And that's it's been a very successful arrangement to have this team available and have the ability to move it one way or the other. We've got a couple of larger franchisees that are in the national and regional CPMs, and they want that follow up, and they want that data. They want the wingman, as I categorize it, to help them oversee the fleet. So we do offer that, and this is an example of the onboarding and ongoing. So we've got an onboarding process, and then we've got the support to continue as we move forward. So I mentioned this onboarding call. This is where we understand more. We want to make sure we understand what our clients are looking to accomplish, and then we want to make sure they're aware of some of the program services that we offer. So on the onboarding process, now this is the part that's a little sticky sometimes. We're not retail oriented. We're not like going to the dealership, they sign you up, thank you, see you later, goodbye. This is more of like it's a partnership, it's a relationship. So it's like setting up a bank line. So we have to go through the credit process. We have you sign a master contract, and that gets the account set up. Then is when we can really go to work and try and find a solution to whatever the need is at the moment. And then once we identify and find and build a vehicle, then we generate VQs and VLOs. That's a vehicle quote and a vehicle lease order. And then after it's all done, you get a Schedule A. And now if it's a purchase leaseback, it's a little different because there's more steps. We have to get the payoffs, run all that information past our client to make sure they like that idea and they understand the value and what we're able to pull out for them. And then once they say, yep, let's do it, then we got to go back and get updated payoffs. So it's a little bit more of a two-step process as opposed to just moving through the regular approval process. Additional services. So we've got, in our maintenance management program, we do not recommend full maintenance. There is an FMC out there, fleet management company, that is notorious for really pushing full maintenance. Full maintenance in most of the service industry, I have yet to find a real true value for that application. The only exception would be is if it's a contract type of arrangement, like it's a consulting company or something like that, where they have to have a specific dollar amount and they can't go over that, or they have to be able to accurately budget to a dollar. That's about the only time a full maintenance program makes sense. Any other time, it's just costing you more money sooner than you need to pay. So we don't advise that. But our alternative is, maintenance management, which is just a couple of dollars a month. Excuse me. I'll get into some of the benefits of it here in a minute. But then there's also a fuel card. There's a fuel card that Bimax has negotiated with one of their vendors. So you've got that. We help with warranty recovery. We do data capture, as I mentioned before. And the big thing, we've got a new product that we've launched, Albert IQ, that is really neat. That it combines GPS and our maintenance management program into one, and it's like maintenance management on steroids. I mean, it's really cool. But then obviously we offer vehicle upfits, and then we help with remarketing. So at the end of the term, you don't have to be in the disposal business. We can handle that for you as well. So maintenance management, as I mentioned, it has roadside assistance. We handle recalls. There's a lot of it that the driver can do on their own once we get them set up correctly. But they always have our team of ASE certified technicians that are 800 call away. I had an example. I had one of the franchises that is on our maintenance management program the other day. This is the app that the driver was using. He needed to get his oil changed, so he went into like 2 or 3 places, and they said, "We don't know what you're talking about. We don't do business with them." Well, they didn't call the 800 number, so they sent an email to us. We called the locations, and it's like everybody else is experiencing today. New employees weren't aware of the program, didn't know that there was national accounts. So all 3 of the places that said they didn't know what they were doing, it was more of the new employee that wasn't up to speed 100%. So, but the driver can go in, and actually, if he knows it's time to get his oil changed, he can go in, find a shop that's close to him, take it in. They scan the barcode. They know exactly what needs to be done. They do it. He doesn't have to touch it. The admin people at the franchisees level don't have to touch it. We bill them at the end of the month. So it works out really well. I was on a demonstration with somebody in Austin, Texas, the other day, and we put his zip code in, and 25 miles, and there were 150 service locations within 25 miles of that particular person's location. So that gives you a feel for how accessible service facilities are. This is just a snapshot of the dashboard for what we call Overdrive. It allows, from an admin standpoint, somebody within the organization to really manage, run reports, capture the data. So instead of thinking you know what you're spending for maintenance, you'll really know what you're spending for maintenance if you're on this kind of program. So it does things like vehicle health monitoring. This is Albert IQ, which will do vehicle health monitoring. So it in real time. So if the check engine light comes on, our guys are notified about it. They'll call the driver and say, "Hey, Joe, did you realize your check engine light's on? Why don't you get it into someplace and have some diagnostic work, and let's figure out what's going on with it." And we did this for somebody that the guy's check engine light had come on a couple, 3 or 4 times, and we had reached out to him, finally took it in, and the shop said if he'd have continued to drive it, he'd probably blown the engine. So those are good things. Those are preventative things. There's also some driver behavior applications that go along with this. So if there's harsh braking, they're driving on 2 wheels, those kinds of things. So it's a great program, and obviously we can go into that. If anybody has any interest in any of this stuff, we can do a more in-depth presentation. I don't do it. We have actually a person in-house. She is a subject matter expert and does an outstanding job of walking through all of the capabilities of these additional services and programs. And I just kind of talked about all this anyway on Albert IQ. Upfit. So as I mentioned before, we are more than happy and have plenty of vendor partners to help us do all the upfitting that any of the franchisees would need, no matter what kind of business that they're in. Our engineers, our truck engineers, are very experienced in all fields. I mean, it's amazing to me how much they know about all different types of vehicles. Then the one thing that people always come back to me and say, "Well, what if I want to get rid of the vehicle at the end? Do I have to sell it? Do I have to write a check to you? How does that work?" Well, what happens is at the end, as I mentioned before, where we were looking at that match depreciation slide, There is a book value at the end, but it's not something we want you to write us a check for. It's really just a point to pause where we will evaluate the vehicle at that point. Does it make sense to take that book value and amortize it over another 12 months? Let's leave it out there for another 12 months. Have your payment go down even further, but again, only depreciated to what we think the book value should be at that new life cycle goal. Let's say the vehicle didn't drive as many miles. One of the technicians has a different route and doesn't drive near as many miles. Now, if we know that in the beginning, we can put them on a longer lease to begin with, so that the cash flow is even further optimized in the beginning. But if at the end, it just because of the way things came about, we can make some changes at that point to then get you on the right track again. Now, if everything's just like we thought, we can take the vehicle to. We have a couple of different options where we can sell them online. We can use some of our brokers that we use, or we can take it to the auction. The difference is the gain or loss at that point comes back to you. So we use that match depreciation. We don't want to get too aggressive with it, in that we don't want it too high of a number, but we don't want too low of a number either. Because we want to optimize your cash flow as best we can. So we have been very fortunate that the numbers that our guys come up for projections have been pretty much spot on. So it's worked out really well, and it makes it easier for the franchisees, the business owners, because they're obviously running their business and they really don't want to take the time to sell a vehicle, go through all that kind of nonsense. I mean, we're doing this for several of the franchisees right now. So I guess kind of the bottom line is that we think we've got this comprehensive cost savings approach. We want to help you find hidden dollars that are living in the fleet today. So that's why we're more than happy to do the fleet analysis, because every time we do that, we come up with some positives, either in the form of equity coming back, or if nothing else, just lowering the monthly lease payment, or your monthly payment period, to a better number, just because of the match depreciation. Not every time do we come up with a huge savings on money coming back into the fleet. But I would say 90% of the time we do. So, and 100% of the time we save money on the monthly payment. Unless, of course, you don't have a monthly payment and you own the vehicles, but then you're going to get so much more positive cash back that having a little bit of a monthly payment, as opposed to having all that cash tied up, is where the true benefit is. So I think we're at the end. We're kind of there. And Erica, if you want to see if anybody's got any questions, we can do some Q&A if now's a good time.
Sure, absolutely. Thank you, Steve, so much for presenting the program options at Mike Albert Fleet Solutions. So now is when we will address questions. As a reminder, you can submit questions to the Q&A function button at the bottom of the control panel. So you'll see that if you hover your mouse at the bottom. We do have a few questions, Steve, so I'll get started on our first one. This question is, what effect will supply limitations this year have on those looking to turn to fleet financing? It's kind of an A and B part question. And the latter part is, will I be able to get the vehicles I need when I need them?
That is a very excellent and timely question. So today, I'll give you an example. The one that I just talked about, that we did the purchase leaseback for, the 70 units, they were on a 5-year life cycle. And we elected to go ahead and move those 20 some units that they had earmarked to be replaced this year, we pushed them off a year because from a supply chain standpoint, it's anybody's guess. And as the only thing I can say is plan much further in advance for replacements. There'll be vehicles available, but we still don't know at what level. I live in Cincinnati, for example. There's 35,000 vehicles parked at the Kentucky Speedway that are already built sitting there, but they don't have chips to make them go. And unfortunately, several of them, several hundred of them, got the catalytic converter stolen off of them while they were sitting there. So that compounds the problem. So there's vehicles that are built. One of the dealer partners that I identified, Randy Marion, they have 400 pickup trucks that were built, and they pulled the chips out of them, and they're sitting in a parking lot. So now, when they get the chips, then they'll be ready to go. Will they be exactly the type of vehicle that you need? Not sure. So I mean, and I don't mean to be, to not answer accurately, but it's a very fluid situation. The manufacturers are, I mean, heck, they even cancel orders on Amazon, and nobody, does anything to Amazon, but they canceled like 4,000 trucks on them. Ford Motor Company did. So, I mean, and this was a couple of weeks ago. I was talking to one of the principals at Midway. There were 250 mid-roof transits in the entire country in inventory. So, I mean, all I can say is plan ahead. We have a full team, a team, not one person, a team that does nothing but locates. They work on locating vehicles. Now, I can tell you that, what we've been, as I mentioned before, they're not cheap. The dealers are not bashful about holding vehicles ransom. And I shouldn't say that it's not that way in all cases. But I've seen several situations where the markup is much greater than it would have been a year and a half ago.
Sure, understood.
I hope that answered the question, but it's all I can say is plan ahead. I've got a client now that has an extra truck. He goes, see if you can find a home for it. I said, are you sure? Because if we get rid of this thing and you need another one next fall, I'm not sure if we're going to be able to find exactly what you got. So, but again, it's a guess just because it's a constant moving target.
Sure, understood. Okay, helpful. We have another question. This individual is asking about the difference between Albert IQ and Overdrive.
Well, Overdrive is more of a general label that's given to our online capabilities. Your dashboard, you have to be on maintenance management obviously to get it, but you don't. But Overdrive is then it's like I'm sorry, Albert IQ is like Overdrive on steroids. So you still have the dashboard, you still have the computer capabilities, reporting, tracking, notifications. There's a multitude of capabilities within either one of the programs. The difference with Albert IQ is it engages the GPS product, and it's a higher monthly cost because of the GPS component, but it then links them both together, if that makes sense. So it's the Overdrive component is just the branding, if you will, that we have to our online capabilities and the interface with the maintenance program. And as I said, report capability, that dashboard that I showed is part of that. And it's even more robust now than it was on the slide that I developed for this deck.
Okay. Got it. Helpful. Okay, let's see. We have another. Would I have to pay separately for my lease and then additional services like fuel cards or a vehicle wrap?
Well, the fuel card is a separate sign up. As I mentioned, BIMAX has a partnership with a provider that offers better rebates than we could have. So that's really the way I would steer you. As far as the and those would be a separate sign up. It's not part of the lease payment. But then the wraps would be included in the financing structure of the vehicle. So it's all inclusive. So whatever the vehicle needs, um, um, whether it's the upfit, the wrap, we even in some cases, some of the states have some pretty horrendous upfront sales tax. We have the ability to roll that into the lease as well. So
Understood.
again, preserving cash flow. That's the goal.
Okay. Great. Okay, another one. Does Buymax offer, I guess this is more related to Buymax. They're asking about insurance for the lease vehicles, and that's something that we can, um,
I would direct them to Veronica. So Veronica is, if you haven't engaged with her, I'm not even sure. I thought she was going to be on this call. She might actually be on the call, but she is the point person for the whole Buymax, whatever you need, and she would be more than happy to coach you or walk you through what they offer.
Yep, Veronica actually is on, and I just gave her the option to speak to that. So Veronica, if you want to speak to that particular question, you should be able to right now.
Hello. So yes, if you are interested in any insurance or any other products that are outside, just Fleet and Mike Albert, you can definitely reach out to Fleet at 4bymax.com, and we can direct you to the right people to help you and assist you to get that going for you.
Great. Okay, I have one last question unless other questions come through. This one is, does Mike Albert Fleet Solutions help clients build EV-based fleets or just combustion vehicles?
That's a good question and very timely. In fact, I have my first EV pickup truck going to one of the franchisees as soon as we can get it ordered. They've expressed interest in it, but we actually are very much in tune with EV. We have another director within our organization that coordinates all of our EV partnerships, and we're very committed to that. The unfortunate part for today's service industry is that the vehicles, for the most part, are like in the case of a transit, for example. If you're trying to go EV on a service van, the cost is not that attractive. Now, in certain areas, let's say California, places like that, I don't know what the rules are. If it's an electric van, can they ride in a carpool lane? Probably. So, there might be some advantages there that would override the additional cost, but we're not afraid of them. I have quite a few actually leased to Amazon that were test vehicles that they originally did when they started looking at EV vehicles. We have EV vehicles, we have CNG vehicles. We're not afraid of any of that stuff, provided that the vendor that's building the unit is somebody that we recognize as being a quality conversion company, because most of them right now are conversions, unless they're ones that the manufacturer is actually building, like the new Lightning pickup trucks from Ford. And like I said, those come right from the factory electric. And I've got one of the franchisees that's very interested in one. So, and again, he's in California. So that's probably the reason.
Great. Okay, Steve, thank you for covering that. And thank you everyone for attending today's webinar. It looks like that concludes the questions that have come through. Please contact Fleet at 4bymax.com. I'll say it again, Fleet at 4, and that's numerical 4, bymax.com for additional inquiries On behalf of Biomax, it was a pleasure to have you with us today. This concludes the webinar, and have a great rest of the day, everyone.